Hello everyone and welcome to my morning report on Thursday the 4th of September with me, Richard Perry, market analyst at Hantech Markets. It is ECB day and subsequently investors and traders around the world are fixated on what the ECB are going to come out with. There's been a significant bit of speculation that suggests that the ECB are moving towards quantitative easing. Markets seem to be pricing in some sort of further easing action by the ECB. Whether it happens today or not remains to be seen. It's unlikely, and that could be the main impact on the markets today. The Forex markets are fairly consolidatory. There's not a great deal of movement. A slight bit of dollar positivity in the early trading, but not a great deal. And I think it's more than likely that these markets will remain fairly well flat in the run up to this ECB decision. The euro, for example, for the last couple of days has been fairly flat and not really doing a great deal. So I think that's exactly where we're at the moment. And certainly, I think that the fact that these bond yields have been pricing in some sort of action with the Bund 10-year Bund on the for the German sovereign debt falling to well below 1% now, I think would suggest that the market is certainly having some sort of expecting some sort of action. Whether it happens today or not, it's unlikely. I think chances are that Draghi is more than. I think Draghi is going to be announcing some sort of asset purchase scheme of asset-backed securities, and that is probably going to be the limit to what he does today. I think that there is a chance that that could disappoint the market and subsequently lead to a short squeeze on the euro. But more about that in my euro analysis in a bit. There's a lot going on today, but I think in the run up to this ECB data, I don't think there's going to be too much movement in these markets. You've got the Bank of England that comes out with its monetary policy at 12 o'clock. I don't think there's any change there expected, and that is going to be probably a little bit of a non-event, to be honest, in front of the ECB. But as I said, you've got the dollar, which is slightly stronger, not too much. I'll zoom in here. The only reason I'm showing you this far out is because we have got quite a long way up towards that high of July 2013, 84.5. But if you zoom in very quickly here, you'll see a slight uptick in the dollar today, but it remains strong on a net basis over the last couple of months. Look at that run we've had. Very strong on the dollar. So yeah, moving into the data we've got out today. Into the afternoon, you've got the ADP report. Now, the ADP report is interesting because the last couple of months of the ADP report have been very good at forecasting non-farm payrolls, which comes out tomorrow. ADP this month is expected to be 220,000 jobs, which is basically exactly where we sat last month. So that could be an interesting tell for non-farm payrolls tomorrow. Other than that, we've also got the weekly jobless claims. 300,000 is expected there, so basically in line with last week. And also then into the afternoon, 3 o'clock, the ISM non-manufacturing data for the PMI. That comes and is expected to be 57.5. And if you look here, we've already broken out to a multi-year high on that data. So strong moves in this service sector growth for the States, and that's expected to remain pretty strong again this month, although it's slightly below last month. But as I said, you've got this ECB data, ECB meeting this afternoon, press conference at 1:30. That is likely to be where we see the most volatility coming through, and just be careful for that. Okay, so my chart of the day, I'm steering clear of the euro today because I think it's going to be pretty flat and then subsequently massively volatile after the data for the ECB. But interestingly, I've chosen the Aussie dollar, the Aussie Kiwi cross, and to be honest, if you look at the Kiwi dollar rate, that's falling, and if you look at the Aussie dollar rate, that's basically just forming a bit of consolidation in a sideways trading band. So if you play that on the Aussie dollar on the Aussie Kiwi cross, then that is the Aussie Kiwi rising, and that certainly seems to be what we're having now. If I zoom out here, this is throughout this year. sideways consolidation band, and then you've broken higher, and you've strongly broken higher. You've also broken out from what is a bit of a flag pattern going on there. You could argue it's a wedge, but a flag pattern, I think, subsequently means that this upside breakout target of 113.50 is where that comes in, around about there, 113.50. So that is my upside target on the Aussie Kiwi. And it's moving very nicely. Certainly, the consolidation periods that we're seeing are breaking out and then consolidating sideways, another breakout. And we had another breakout yesterday, and it looks like it's continuing on its way higher. These momentum indicators are incredibly strong on RSI, MACD, and stochastics, all very strong, and suggest any sort of a weakness or a dip is a chance to buy. The latest breakout level is 111.90, and any sort of weakness towards there, that's about 30 pips to the downside. Any weakness towards there, I think, is a decent chance to buy. I think there's a very good support band between that 111.15, 111 around 18.20 towards that 111.90. I think is a very good band of support, and that should now support the next leg higher that we see. Nice bit of consolidation overnight today, so maybe that is now going to give us this chance to buy the Aussie Kiwi cross, and I think we're going to see further upside in due course. I like this. I like this pair on the upside. It's very good. Anyway, I wish you good luck in your trading today, and certainly the euro is going to be the major focus. A lot of volatility this afternoon, so be careful on your stops. And I wish you good luck in your trading, and I will speak to you later. Thank you.